Okay, so my dear friends, this video is for educational and informational purposes only. Please do your own research or consult a professional financial advisor before investing your money. Thank you. Get your stock watch list ready, guys, because Thursday, June 25 is going to be an absolute battlefield for the stock market. 6 major companies are dropping their latest earnings reports all on the exact same day. These 6 stocks cover everything from the food you eat to the steel in our buildings and the packages on your doorstep. If you trade options, manage a portfolio, or just want to catch the next big market swing, you can't miss this video. Let's break down the hidden numbers, the market expectations, and what to watch for each stock using the absolute latest real-time Wall Street data. First up, we are checking the SPCX with McCormick Company. They are reporting their fiscal Q2 earnings before the opening bell. According to the latest real-time data, Wall Street analysts are expecting an earnings per share of exactly 70 cents on a massive revenue target of $1.92 billion. Here is the real story. Food companies have been raising prices for years due to inflation. But now, everyday consumers are finally fighting back against high grocery bills. The number one thing to watch in this report is volume growth. Are people buying fewer bottles of spices or are they switching to cheaper store brands? Live options data compiled by Bloomberg indicates that McCormick shares are priced for a massive 7%, swinging the moment the news drops. Next is Acuity Brands, listed on the New York Stock Exchange as AYI, a massive player in industrial lighting and building technology. They report their fiscal Q3 numbers early Thursday morning at 6 a.m. Eastern Time. Real-time analysis shows that top analysts have revised their forecast. They now expect an earnings per share of $5.16 on $1.18 billion in revenue. Acuity does not just make standard light bulbs. They design high-tech automated lighting networks for massive airports, skyscrapers, and retail facilities. The key metric to watch here is their operating margin. Acuity has been shifting from selling physical lighting hardware to high-margin building management software. The stock closed at 317.62 cents right before the holiday weekend, and a software revenue spike could send it much higher. Third on our list is Darden Restaurants, the powerhouse behind Olive Garden and Longhorn Steakhouse. They draw fiscal Q4 results right before the market opens on Thursday morning. The current consensus compiled by research shows that Wall Street expects an earning per share of $3.63 and a revenue target of $3.73 billion. Darden is considered a critical health check for the American middle class. When times get tight, families cut out sit-down dinners and switch to cheap fast food. Keep your eyes entirely on same restaurant sales. If restaurant traffic is dropping, it proves that consumers are feeling deeply squeezed. Analysts are predicting a steep 21.8% year-over-year earnings jump, meaning Darden has zero room for error. So moving into the afternoon, global technology distributor Synnex reports their fiscal Q2 earnings. This company is a massive revenue giant. Live data tracked on TradingView confirms that Wall Street is hunting for an earning per share of $4.12 on an enormous revenue estimate of $16.80 billion. Synnex is the middleman of the tech world. They buy hardware in bulk from giants like Microsoft and Cisco, then distribute it to over 150,000 corporate clients. Consensus EPS estimates have actually been revised 1.9% higher over the last 30 days, signaling Wall Street optimism. Listen closely to management commentary on corporate IT budgets to see if regular businesses are finally upgrading office tech or if money is still strictly flowing into AI chips. Our fifth company brings us straight to heavy industry. Commercial Metals Company drops their fiscal Q3 report later in the afternoon. Real-time tracking shows analysts are expecting an earnings per share of $1.75 and revenue of $2.4 billion. CMC is a massive provider of rebar, which is the steel used to reinforce concrete in highways and buildings. This stock has been on an absolute tear, surging roughly 49% over the past year, thanks to heavy infrastructure spending. But because the stock has dropped significantly from its highs, some analysts are debating if it's now getting undervalued. Watch their project backlog. If they have a long line of signed construction agreements waiting for steel, the stock can reverse its downward trend and regain momentum. Finally, global shipping giant FedEx caps off the day with a high-stakes fiscal Q4 earnings report. But pay attention. This is a brand new stock on the market. Parent company FedEx Corporation recently spun off its highly profitable trucking unit into this independent company. Live projection shows Wall Street expects an earnings per share of $1.56 on $2.2 billion in revenue. Trucking volumes directly mirror the absolute real-time state of global shipping and manufacturing. Because this is one of their very fast reports as a separate company, look at their standalone operating efficiency. Investors want to see if this trucking business can maintain high profit margins completely on its own. Thursday, June 25 is going to bring massive volatility to these 6 different sectors. Now I want to hear from you. Which of these 6 stocks are you trading? Before wrapping up, let's quickly look at these final 3 stocks. Nvidia and Elon Musk, 2 massive powerhouses. The newly public SpaceX and Tesla. Let's start with Nvidia. According to live Google Finance metrics, Nvidia is trading at $210.69 per share, marking a solid 2.95% recovery from its recent intra-week drop. The real predictive value lies in how it behaves the moment the opening bell rings. If you look at its 52-week range of $142.03 to $236.54, the stock is tightly wound near its upper limits. Here is what you need to watch immediately after the market opens. Track the day range and volume fields in the first 30 minutes of trading. Nvidia is currently pricing in a massive $20 billion corporate bond offering when the market opens. Institutional credit desk will arbitrage this debt against the equity. If the opening volume spikes significantly above its 30-day average and the price holds above $212, it predicts that the market is viewing the $20 billion debt as growth capital rather than dilution. This will signal a clean runway back towards $225. However, if you see the live chart breach the $205 level on heavy opening volume, it predicts a temporary institutional rotation out of equity, making a retest of $200 psychological support line highly likely before any stabilization occurs. Everyone can see on Google Finance that Tesla closed at $400.49, sitting right below its powerful 200-day moving average. To predict its next move right after the market open, you must watch the open price, because Tesla trades an extreme trailing PE ratio of $365.96 and opening price above $402. Will immediately force option market makers to buy up underlying shares. This sudden mechanical buying pressure predicts a rapid short squeeze pushing straight toward $415. Conversely, if the morning bell rings and Tesla opens below $398, that 200-day moving average will act as a concrete ceiling. This opening weakness predicts that the day traders and algorithm will aggressively short the stock. On your live Google Finance chart, track the downward trend line to see if it slices through minor morning support, which predicts a deeper slide to test its next major visible floor at $381. Now let's look at the Elon Musk's second big company, SpaceX. On Google Finance, you can see the price drop to $185. This happened because SpaceX spent $60 billion to buy a new AI company called Cursor. To see where the stock will go next, do not just look at the price. When the market opens, look at the volume tab. If the price goes over $190 in the first 30 minutes, it means big investors are buying the stock. This predicts that the price will easily go back up to $200. But if the stock goes down below $180 in the morning, it means everyday buyers are panicking. They are worried about the company losing money right now. If 180 breaks, the price will keep dropping during the day. If you see this happen on your screen, expect the stock to fall even more. It will likely go down to 175 or 172 before big investors start buying it again. Trade safe, guys, and I will see you in the next video. Bye bye.